Market crash was just a warning. Are you ready? Hi everyone, here is James. Today I need to tell you something very important. So listen carefully. The recent market crash was no accident. It was a warning. But now on you need to be prepared. You need to have financial vault. Why? Because we're in the middle of the biggest financial shift in decades. A few months from now, when you check your bank account, you might be shocked that hard-earned money you saved every single year it will shrink by 2% without you spending a single cent. That means if you deposit 100 in the bank, not only will you earn zero interest, but you might even have to pay the bank $2 per year just to store your money. Sounds crazy, right? But it's happening. This is called the negative interest rates, a desperate move government use when economics fall into recession, forcing people to spend instead of saving. Japan, Denmark, Switzerland, Sweden, they've all done this before, and now it's America's turn. You might be thinking, this is the US, what does it have to do with me? Well, let me remind you, in 2008, the financial crisis started in the US, but the entire world paid the price. At this time, you will be no different. Look at the stock that has suffered the most in the past 2 years, Nvidia. Do you know what their CEO, Jason Huang, has been doing since August last year? Not hitting the gym, not running. He's been selling Nvidia stock every single day. Not just him, the entire management team, board members, they're all cashing out. Now ask yourself, do you really understand AI better than Nvidia CEO? It's not just Nvidia. The CEO of the top 7 US tech giants, Amazon, Meta, Microsoft, they've all been slowly selling their stocks. And now even Warren Buffett, the greatest investor in history, has announced that he had sold off 50% of his Apple stock. Apple was his highest holding. Why is he holding now? A record high pile of cash. And what is he buying? US Treasury bonds, more than the Federal Reserve itself. Why? Because he knows the US is likely already in a recession. The Fed has two choices, and both will change the world. 2 years ago, when inflation was out of control, the Fed raised interest rates to slow the economy down. Higher rates made it more expensive for business to borrow, forcing them to lay off workers and lower wages. But now, the Fed is suddenly taking about emergency rate cuts. Not if, but how much. Why? Because the biggest nightmare for any country is unemployment. If the unemployment rate goes above 4.2%, business will start mass layoffs and the economy will collapse into recession. And guess what? The latest US unemployment report is just upon a jump to 4.1%. So now Wall Street is asking, has the US already entered a recession? The Fed has only two options left. One, do nothing, keep rates high, and let the economy crash, triggering a global financial crisis again. Two, cut rates, print money, and try to save the economy. If the Fed cuts rates, what will happen? The US dollar will lose value and inflation will come roaring back. If you make great profits in the stock market last year, and you are now sitting on the pile of the US dollars, I have to warn you, your money is about to lose its value. If the dollar drops 10%, your stock market gains are wiped out. So what will the smart money do? They will move their cash into assets that will skyrocket when the dollar falls. Right now, the safe haven assets are emerging. One, gold, the ultimate safe haven. When markets are uncertain, what is the world's most trusted safe haven asset? Gold. Gold is not just the oldest form of money. It is the only asset that cannot be destroyed by money printing. Historically, every time uncertainty rises, gold surges as investors rush to protect their wealth. Why? Because when the US dollar loses value and inflation surges, holding cash means losing wealth. But gold doesn't lose value, it rises. Back in 2020, when the Fed flooded the economy with cheap money, gold shot past 2,000 per ounce. Now, with the Fed about to cut rates again, capital is already pouring into gold. Prices are quietly rising. And once market feel escalates, gold will take off like a rocket. Smart money never waits for the news to say gold is booming. They position themselves early. 2. Bitcoin. Digital gold is about to explode. Bitcoin ETFs were approved a while ago, and institutional investors have already flooded the market. And now the big news, Trump has won the presidency. Not only that, he has launched his own cryptocurrency. Since his election, Trump's stance on Bitcoin has become more bullish, even suggesting that US government should hold Bitcoin as a strategic asset. If Trump's administration begins accumulating Bitcoin, what will happen? A historic bull run. Short-term US treasuries, Buffett's favorite asset. Why short-term bonds instead of long-term bonds? Because short-term US bonds provide fast, safe returns, maturing in just a few months. Buffett holds more US bonds than the Federal Reserve, but he only buys short-term bonds. Why? When the Fed cuts rates, bond yields drop and bond prices surge. Short-term bonds not only give guaranteed interest, but they also appreciate in value. The next global wealth shift, will you catch it? We are in a major turning point in the global market. If you do nothing, your money will keep losing value. But if you make the right moves, this could be the biggest opportunity for a lifetime. I will be positioning investment insights regularly. If you don't want to miss out, subscribe and turn on the alert notification. Let's learn English while discussing global investment trends and achieve financial freedom together. If you found this video helpful, like and share it with more people. I hope today's insight help you avoid mistakes and fast track your journey to financial freedom. See you in the next move. Bye.